Good evening. It is time for today's tax talk. I'm your host. I'm attorney Stephen Leahy. Want to welcome you here. It is Crypto Tuesday, July 27th, I believe. Let me look at 26th. It's Crypto Tuesday, July 26th. You know, no matter what happens with crypto, every road leads to regulation. That's what we're going to talk about today. Won't you join us? Uh-oh. So here we go. It again, you know, crypto is falling. Everybody knows. Everybody, cryptocurrency. Everybody knows what's going on here. And but it was several months ago. We were talking about the regulators were telling crypto's just too valuable. It's just going up too high, and we have to regulate it. And now the argument's, well, crypto's crashed. We're going to have to regulate it. And of course, when people lose money, there's going to be a lot of complaining, and they're going to blame it on everybody but themselves. It's not their fault that they bought crypto, that it was a risky bet. Everybody knew it. It's okay when people win, but when people lose, they're going to blame somebody, and that's what's happening, right? They're blaming all of these. Now, again, that doesn't mean there wasn't some bad players. Never good when you put your money someplace and then they go bankrupt and now you can't get your money. This happens. It's happened here, and there's lots of regulation. We got to protect these people from losing money. And then we had to protect those people when they're making money. Of course, when they're making money, when there was money to be made, there were people, donating to political campaigns. We documented that here in this space. We were showing state to state. They were couldn't get federal regulations, so they were going to get protected. These cryptocurrency companies were going to get protected from state to state. And when you're making a lot of money, you have the money to burn. You have money to hire politicians to help you, right? But now the money's gone. The money's dried up. So there is no money to be spent to get political help, and so that also comes up to regulation. So every road leads to regulation. I like my let me go this way. I like my sign. I made that sign. I like that. But anyway, so let's begin where we do every Crypto Tuesday, where we begin with the markets. What's going on with the markets? Well, they just changed again. Well, it's kind of flat today so far. Looks like Ethereum went up 1%. Bitcoin is just above the 0.5%. At 21,000. Where has this been for the last week? On a downwards spiral. I shouldn't say spiral. It's fallen, but not all that much. Not in crypto terms, right? Because it could go out. It could go much more volatile than that. So same here. I guess Ethereum was going up all week, or it kind of stayed the same. So there we are. That's the markets. Good story. Let's see if we can get this up. The crypto market's catastrophic meltdown sent prices through the floor. It also sent regulators into action. And this is what got me to come up with that. All roads lead to regulation, because they've been talking about regulation all along. The fact that they're going to regulate is a given. The reason why they're regulating, well, that changes on the circumstances, because they're always going to regulate. That's just the way it is. So let's see what they're saying here. The crypto market went into full meltdown in May and June, losing $1 trillion in value in a matter of weeks. Federal regulators took notice. They also took notice when it went up. The sudden and rapid collapse of popular cryptocurrencies and crypto-related companies revealed the unwieldy nature of crypto industry and provided some validation to already skeptical regulators. And it happened, already skeptical regulators. They were coming after him anyway. And it all happened against the backdrop of an already accelerating regulatory pressure. Because unlike a traditional stock market, there aren't robust federally mandated protections in place for crypto investors. As a result, experts anticipate crypto regulation to ramp up even more in the coming months. Again, it was coming anyway. Didn't matter what it was. After the catastrophic events that have unfolded in the crypto market over the past few weeks, it is clear that the stringent regulation could arrive soon. The collapse of decentralized finance lenders could be the reason that regulators have been looking for to implement draconian controls over cryptocurrency. What they've been looking for it all along. They just seize on any reason. Bitcoin and Ethereum are more than 50% down from all their all-time highs late last year. The largest crypto has been hovering around the 20,000 mark for weeks now. Still there today, 21,000 I think it was today. While the second largest has largely been holding near 1,000, about where it is today, up until it recently rallied more than 40% in a matter of days and climbed above 1,500. Let's see, where is it? It is 1454. I believe they're talking about Ethereum. As of Monday, Bitcoin was holding above 21,000, 3 times lower than its all-time high of $68,000. This week's Federal Reserve meeting could introduce new volatility to the crypto market. The Fed is expected to bump its benchmark interest rate by 75 to 100 basis points, and it could send stock and crypto prices down in the near term as investors remain wary of the economy's health. In the near term, we've seen Bitcoin and other cryptocurrencies generally sell off with risk assets as the speculative frenzy that defined investing over 2020 and 2021 grinds to a halt. No one actually knows how the average investor will be affected by growing regulations, at least not until the federal government decides on specific rules. But all in all, many experts generally agree crypto regulation will actually be a good thing for investors. It's a good thing. Of course. Regulations will come up, and I'm not, yes, some regulation is necessary. We don't want crooks out there. But you can't protect people from themselves. Regulations will come up, and they will come up at some point, which would stabilize the market even further. So regulations they'll help the market. They'll stabilize the market, but it won't help it grow, stabilize it down. That protects investors. So it's a good thing. It's not a bad thing. It seems like they're trying to convince themselves. What's happening to the crypto industry and why does it matter? Ever since Bitcoin and Ethereum hit all-time highs in the end of 2021, the market has been on a ruthless downtrend with little sign of relief. Bitcoin has been tracking with the stock markets very closely this year and has been impacted by the challenging macroeconomic environment as a result. Conditions in the crypto market took a turn for the worse in May when Bitcoin fell below 26,000 for the first time in 16 months. The rest of the cryptocurrency market fell with it because investors withdrew their liquidity from the crypto market at an extraordinary rate. A popular stablecoin known as Terra USD depegged from the dollar, which caused its linked cryptocurrency Luna to crash as well. The Luna and UST crash led to a contagion among other crypto firms. Three Arrows Capital, a crypto hedge fund based out of Singapore, collapsed a few weeks after the Terra Luna crash, which then triggered the downfall of many other companies across the crypto market, particularly lenders which the hedge fund borrowed from in enormous sums, including BlackFi, Celsius, Voyager, and Genesis. Crypto brokerage Voyager Digital and crypto lender Celsius both filed for Chapter 12 bankruptcy recently. I don't think it's because of a lack of regulations. It's the sudden fall in value that causes these problems, in my opinion. Crypto trading and lending platforms became latest crypto firms to halt customer withdrawals. The collapse of the crypto market puts U.S. regulators in a tricky spot. That's because the vast majority of both crypto investors and platforms that power it are not based in the U.S. This is a new spot where clearly, if such regulators view their roles as investor protection, they will need to respond somehow to these disasters. Uh, he says that obvious regulatory response is mandating U.S. based platforms be fully regulated and implement a framework where unlicensed platforms can be quickly shut down shortly after launch. While that doesn't address the issue of Americans assessing platforms in other parts of the world that don't abide by U.S. regulatory standards, it would be a step in the right direction, he says. Whatever the regulatory response, it is one of the more complicated dynamics U.S. regulators have ever faced. I don't know if that's true or not. I also have a couple other stories I wanted to kind of just highlight. Here's a story about the CEO of Titanium Blockchain pleads guilty to 21 million cryptocurrency fraud scheme. And you're going to see a lot of these stories now. They're going after any of these platforms that had made money and then collapsed. Poor management? Yeah, poor management. Don't put all your eggs in one basket. We've all heard that. And they put all their eggs in the one basket. And it was very beneficial for the last several years. The CEO of Titanium Blockchain Infrastructure Services pleaded guilty Friday in the Central District of California for his role in the cryptocurrency fraud scheme involving this company's initial coin offering that raised approximately $21 million from investors in the United States and overseas. According to court documents, this gentleman was, should I call him a gentleman, of California, was the CEO and founder and purported cryptocurrency investment platform and touted TBIS as a cryptocurrency investment opportunity, luring investors to purchase bars, the cryptocurrency token or coin offered by the ICO, through a series of false and misleading statements. Although he was required to do so, Stoley did not register the ICO regarding TBIS's cryptocurrency investment offering with the U.S. Securities and Exchange Commission, nor did he have a valid exemption from the SEC's registration requirements. That's all been up in the air. They keep telling us crypto isn't securities. Cryptos isn't securities. But then you have to register with the SEC anyway. He admitted that to entice investors, he falsified aspects of the white paper, which purportedly offered investors and prospective investors an explanation of the cryptocurrency investment offering, including the purpose and technology behind the offering, how the offering was different from other cryptocurrency opportunities, and the prospects for an offering profitability. He also planted fake client testimonials on the website and falsely claimed that he had business relationships with the Federal Reserve and dozens of prominent companies to create the false appearance of legitimacy. He also further admitted that he did not use the invested money as promised, but instead commingled the ICO investment funds with his personal funds, using at least a portion of the offering proceeds for expenses unrelated to the company, such as credit card payments and the payment of bills for his Hawaii condo. This happened. I'm not laughing because I think it's funny, because it happens in every industry. No matter, yes, it happened in crypto, but it happened in stocks and bonds and futures and all types of these companies. This happens over again. He pleaded guilty of one count of securities fraud. He is scheduled to be sentenced on November 18th and faces up to 20 years in prison. A federal district court will determine any sentence after considering the U.S. sentencing guidelines and other statutory factors. Assistant Attorney of the Justice Department's Criminal Division, Assistant Director Leahy of the FBI's Criminal Investigative Division, and Acting Special Agent of the Office of the Inspector General for the Board of Governors of the Federal Reserve System and the Bureau of Consumer Financial Protection made the announcement. Well, you got all those alphabet against you, you're going to prison for a long time. The FBI's Los Angeles Field Office and Federal Reserve Board's OIG Western Region San Francisco office are investigating the case. Fraud section trial attorneys are prosecuting the case. One more I wanted to talk about. We're running out of time. I can't get into Bloomberg. Coinbase faces SEC probe on crypto listings. Shares tumble. So, you're going to see a lot of this Coinbase and other companies like Coinbase who have this trouble. Coinbase Global Inc. is facing a U.S. probe into whether it improperly let Americans trade digital assets that should have been registered as securities, according to 3 people familiar with the matter. The company's shares dropped 21%. The U.S. Securities and Exchange Commission's scrutiny of Coinbase has increased since the platform expanded the number of tokens which it offers trading, said 2 of the people who asked not to be named because of the inquiry hasn't been disclosed publicly. The probe by the SEC's enforcement unit predates the agency's investigation into an alleged insider trading scheme that led the regulator last week to sue the former Coinbase manager and 2 other people. We are confident that our rigorous diligence process, a process the SEC has already reviewed, keeps securities off our platform, and we look forward to engaging with the SEC on this matter. Chief Legal Officer. I was going to say that sounds like an attorney, doesn't it? The drumbeat in Washington for U.S. regulators to do more to oversee crypto has grown louder as digital currencies has tumbled from all-time highs. It was pretty loud before that, wasn't it? Erasing hundreds of billions of dollars in market value. SEC chair has honed in on the trading platforms and argued that they should do more to protect retail investors. As the largest U.S. trading platform, Coinbase lets Americans trade more than 150 tokens. If those products were deemed securities, the firm would need to register as an exchange with the SEC. Coinbase shares fell $14.14 to $52.93 in New York, leaving the stock down 79% this year. Coinbase has reportedly sparred with the agency over how it oversees the industry, and the firm last week called the SEC to propose clearer rules. Meanwhile, after taking a relatively cautious approach for years, Coinbase has boosted its token offerings. Tensions bubbled up further July 21st when the SEC accused one of the company's former employees of violating its insider trading rules by leaking information to help his brother and a friend buy tokens just before they were listed on the platform. While the agency didn't allege wrongdoing by Coinbase, the SEC said it had determined that 9 of the dozens of digital tokens that men traded were securities, including 7 of the exchange says it's listed. Federal prosecutors in Manhattan have charged the 3 men with wire fraud, conspiracy, and wire fraud. Again, in response, Coinbase put out an entry of its blog titled, "Coinbase does not list securities." End of story. This has been the debate. What is a security? How do we go about determining what is a security and what is not a security? And of course, that's what the fight has been about all along. He pointed out that the Justice Department chose not to file securities fraud charges despite reviewing the same facts as the SEC. He also said that, the SEC wants you to be securities, so they have jurisdiction. If you're not securities, the SEC doesn't have jurisdiction, and so they want you to have jurisdiction. So now you're security. He also said that before listing tokens, Coinbase analyzes whether an asset could be considered a security, and also considers regulatory compliance and information security aspects of the asset. Investigation by the SEC's enforcement unit can lead to the regulator suing companies or individuals. Coinbase, which went public last year, previously acknowledged that it has faced scrutiny from the regulator. In its first quarter earnings report, the firm said it had received investigative subpoenas from the SEC for documents and information about certain customer programs, operations, and intended future products, including the company's stablecoin and yield-generating products. To decide if a digital asset is a security, the SEC applies its legal test, which comes from the 1946 U.S. Supreme Court decision. Under the framework, the agency considers a token generally to be under SEC purview when it involves investors kicking in money to fund a company with the intention of profiting from the efforts of the organization's leadership. He has long argued that many cryptocurrencies come under the regulator's jurisdiction, and the firm's offering then should register with its agency. However, the SEC mostly hasn't said specifically which coins are securities, and exchanges decide whether to list an asset. Platform operators are seeking to avoid offering those deemed securities because doing so could trigger investor protection rules, some of which crypto enthusiasts say are incompatible with digital assets. That's always been the fight. So anyway, I wanted to read those two stories. I thought it was interesting. We're gonna have a lot of these stories now about regulators. We got to regulate because they went down. We have to regulate because it went up. It's a security, so we have jurisdiction. And every agency is going to do that. And again, when there's money to be had, IRS is there with their money, with their hand out. When you're losing, right? People are losing. They're going to complain. Regulators are going to come in. So here's the thing: all roads lead to regulation. So whatever the reason, whatever the excuse, that's what's going to happen. Okay. So thanks so much for joining us here today. I'm going to ask you to like and subscribe our content. We need your help to get it out there. Without you, no one will find us. So we need your help. So like and subscribe. Thank you so much. And remember, if you owe the IRS money, mostly, if you have unfiled tax returns, I can show you how to get back in compliance quickly. I can show you that. So you go it's in the book. Deal with your IRS problem today. Go to freeirsbook.com. freeirsbook.com. Get your copy of Deal with Your IRS Problem today. We will ask for the small shipping and handling fee, but otherwise the book is free, and all of the goodies that come with the book are also free. But we will ask for shipping and handling charge. So thanks so much for joining us here today, and we'll be back tomorrow with more tax information. Remember, tax news is really at the heart of all news, and you get that news here first. So thanks so much for joining us. And we'll see you again tomorrow. Thanks again.